everyone. Welcome to the Interchange Recharged podcast. We're recording live from Wood Mackenzie's CCUS conference here in Houston. I'm your host, Sylvia Leyva Martinez. Over the next 2 days, we're bringing you insights straight from the people shaping the future of carbon capture, utilization, and storage, CCUS. From financiers and legal experts to technology innovators and project developers. In this episode, we kick things off with Omar Farouk, who leads asset finance at Bank of America, overseeing investments across sustainable, core, and digital infrastructure. We talk about how one of the world's biggest banks is approaching carbon capture, from financing first-of-a-kind projects to navigating the challenges of scale, transport, and risk. Omar shares how point source capture is already bankable, how direct air capture still needs to prove its economics, and why policy incentives like 45Q are absolutely critical to making CCUS projects work in today's market. It's a fascinating look at how finance and policy are shaping the path to commercialization. Let's dive into our discussion. Omar, welcome to the Interchange. I'm so happy to have you here.
Thank you for having me.
So you work at Bank of America and you lead the CCUS investment side. How does that work? Could you tell me a bit more about your role and the involvement of Bank of America within the CCUS space?
Sure. So I've been at the bank 19 years, almost 20 at this point. And today I am responsible for our asset finance business, focused on 3 pillars: sustainable infrastructure, core infrastructure, and digital infrastructure.
Okay.
Within the sustainable sector, we focus on carbon capture. In 2021, the bank set a goal to deploy 1.5 trillion in sustainable finance activities.
Wow.
And of that, we've already met 750 billion. So carbon capture and sequestration is part of that commitment.
Okay.
We're a global business. We have teams in New York, London, Paris, Singapore, Hong Kong. So we're looking at it globally. We're working with our clients globally on these efforts, and different regions have different needs and different products that come into play.
Yep.
For carbon capture specifically, we've done a couple of things. We have invested as tax equity investor in a transaction in the US that captures and sequesters carbon. We've also worked on a transaction in the UK that is more focused on the piping of the carbon and then sequestration.
Okay.
From an industry perspective, we cover sustainable finance and core infrastructure and digital infrastructure, so it's pretty wide, but carbon capture and sequestration is a big part of it. And it's an industry that we think there will be a lot more to do in the coming years.
We just had an interview with Shahul from Emerson, and he touched on a point that we have discussed time and time again in the podcast that is related to the challenges of CCUS being first of a kind. Right now, the technology is just starting. There's a lot of interest. We're seeing a lot of pilot projects. So from your perspective, what makes a CCUS project particularly interesting and challenging compared to other energy projects?
Carbon capture is a wide spectrum.
Yes.
We have direct air capture and then we have point source capture. And those technologies also vary from, what would be considered first of a kind commercialization to what has existed for quite some time.
Okay.
So point source capture, which just, for the audience, that's when you're in an ethanol plant or a gas plant and you're installing equipment to take the carbon out of the exhaust effectively of that system. There's a lot of history in point source capture technology.
Okay.
And there is a lot of validation from independent engineers on that technology as well, right?
So it's not new technology.
Yeah, it's new in its application, but it's not necessarily a new technology.
Okay.
Whereas, when you look at direct air capture and it comes in various formats, that is new. And there is a real issue or there's a real challenge on how is that going to scale and how are we going to finance that?
Okay.
Then you look at the projects themselves and you say, okay, well, what as financiers do we worry about? And we worry about commercialization. Mm-hmm. And commercialization has 2 components. Can that project be built? And can that technology reach competitiveness in the market without subsidies over a period of time?
When you say competitiveness against itself, against other,
against other technologies.
Okay.
Right? So if you're capturing carbon, one of the things we think about is okay, this technology versus another carbon capture technology, which one is going to be the one that is competitive over the long term?
Okay.
And then we're thinking about how's this project going to get built? Where are we going to sequester it? What are the challenges with that? How are they capturing it? How efficient is that technology? What is the permitting regime? What is the environmental liability? The transaction that we did in the US, it took us about 9 months from start to finish.
Okay.
We had multiple streams working on it. We're lucky in that we have an engineering team in-house.
Yeah.
So we had them diligence the technology in a lot of detail for a decent amount of time to get really comfortable that it was going to work. But there's a lot of stakeholders. You want to understand that if you sequester it, that it's not going to leak. And who's going to take that risk, and how's that risk allocation going to work over time?
Yeah.
Just generally, your question of like, how does this compare to others? There is not a lot of carbon capture transactions that have gotten done. So naturally, a lot of things we're doing for the first time.
Yes.
Does it feel a lot different than the first time we were doing a solar transaction? Somewhat. But when we were doing the large solar transactions 10, 15 years ago in the US, there was a lot of precedent in Europe.
Okay.
Right? Here, we're doing these for the very first time. And it's really for the very first time on a much larger global scale. I wouldn't say that it's just so different. It's just new and people are learning it for the first time.
It seems like there is some familiarity already, like some lessons learned from other types of transactions within the renewable space. So now we're going through that cycle again with this, not necessarily new technology, but new applications of an existing technology, creating the business models, engaging with new stakeholders. So,
absolutely. And I think you put it best. The creating the business models is a very important point.
Yeah.
In our US transaction, one of the big risks was that if you sequester the carbon, it could leak.
Yeah.
Now, the engineers will tell you, and the sponsors and our view is that it's not going to leak, but it can.
Yeah.
And how do you protect yourself? So we had to get an insurance broker to come in and help us provide that coverage. That was the first time that was done. Now, that product can be replicated in other transactions as well. In the US, the incentive regime is 45Q,
Yes.
which you get a certain amount of dollars per ton of carbon that's captured.
So if there is a leak, then
it gets recaptured.
Okay.
That's right.
Actually, talking about 45Q and the
Yeah.
incentives that are out there has been a lot of conversation about the One Big Beautiful Bill, how this has reshaped the incentive landscape for energy in general. But it seems carbon capture was one of the biggest winners in all the changes that have happened. So how do you see the policy, the incentive landscape affecting the financial viability of CCUS projects?
I mean, generally, policy drives a lot of energy across the spectrum.
Yeah.
Carbon capture has had a lot of support for a long time. The bill certainly puts, a lot of more regulatory tailwinds behind it. It's going to come down to permitting at the end of the day, because the missing piece in this is we can capture the carbon, we can sequester it, but to transport it, we may need to build large pipelines, and they may be interstate. So that's where I think we need more focus, and we need to streamline that process so we can kind of actually ship that carbon to where it needs to be. The tax incentives and the regulatory focus has been very positive for the industry.
How dependent is CCUS on the carbon incentives? Like, are projects economic without it?
When you're capturing the carbon and you're sequestering it, your main source of revenue is the incentive.
Okay.
Right? Because typically if you captured the carbon and you sold the carbon, you would have somebody that's buying the carbon and you would get cash for that.
Okay.
But if you just capture it and you deposit it and sequester it in the ground, your revenue model, it really comes in two formats, which is incentive, which is the tax incentive.
Yeah.
Or two, voluntary carbon offsets, where somebody may be utilizing that for their scope 3 emissions.
Yes.
Those are the two places where you get revenue. It's very different from that perspective, in that if you don't have the incentive, then you would need the voluntary carbon market to pay significantly more, because the commodity itself that's being sequestered, it's going into the ground.
Yes. So if there is no comparing it to the renewable space, which is the one that I'm most active in, is you have an offtake for electricity, so there is an end user for that.
That's right.
Right now, it seems that for CCUS, the main business model, I would say, is just storing it and relying on those incentives, but there is a possibility to have a future use for that captured carbon. Now, I know that in the beverage industry, there are other industries, oil and gas, that could use it.
One of the changes that the OBB makes is that you can use the captured carbon for enhanced oil recovery. A similar incentive to sequestration.
Okay.
That is a potential revenue source, where if you used it for oil recovery, you would expect them to pay you for the carbon, and on top you would get the tax credit.
You mentioned already a bit about some of the other stakeholders involved. Are there any particular sectors or industries where you're seeing the economics of carbon capture working best?
I think at a very high level, you're looking at the cost to transport and the cost to sequester. Those are one input, and then the carbon intensity of the business.
Yeah.
Right. So ethanol is something where the emissions are pretty concentrated in carbon. So it's very easy to capture.
Yeah.
Also, where we have a lot of ethanol plants, it's near a lot of sequestration sites. So it's a pretty good application to use it. And we've seen a lot of our clients and a lot of the market focus on that sector.
Okay.
I think ethanol is probably a very good application.
Okay. So would it seem also like projects where the source of CO2 is localized, where you store it is relatively close?
Yes.
Would that make a project way easier compared to another project where the transport would be
Yes. So
higher
I mean,
share?
look, the closer you are to the sequestration site and the source of the carbon, the easier the project is. Because, like I mentioned before, I think one of the hardest thing is to actually build the transport.
Okay.
So transactions where that transport is not long, the economics are just significantly better.
Okay. And then from your perspective, what role do emerging technologies play in reducing costs like CapEx or OpEx over time for CCUS projects?
The space is getting, there's a lot of innovation in the space. There's lots of companies that are focusing on capturing carbon from direct air capture to point source and creating more efficiency. And then, some of the folks are working on using carbon in materials that require carbon as well. So as a way to store it long term. I think over time, all of this is going to just lead to, more efficiencies, less CapEx, less OpEx over time. There's a lot of companies that have made commitments on carbon specifically, and I think all of the above approaches are going to be needed.
Yeah, so it seems that there are a lot of different solutions available, but it's going to depend on exactly like the specific project you're talking about, right? Because each project is going to have different needs.
I don't think it's fair to say that we will have one solution. Like in certain areas or for certain technologies or certain clients, a particular solution will work great. So maybe point source is the right solution for ethanol, but for cement and steel, maybe it's a very different solution, right?
Okay.
So it will take time as the market evolves and the entrepreneurs innovate.
What does you and your team need to see in a project in order to commit capital to it?
We do this in our project finance business.
Yep.
So we look at it from that lens, right? We're looking for long-term contracts. We're looking for good engineering studies. We're looking for the right risk allocation, strong sponsors, management teams with a lot of experience in the industry or ancillary industries, and the right way to package it into a complete product. You have to be willing to spend time, and there will be changes that are needed to get it done.
Yeah.
And I think having the right community engagement and permitting support is also really very critical. But we look at this like we look at any other project finance transaction in the same kind of lens.
I was going to ask, is there any point in particular that has become more relevant over the past few years or months? And I'm thinking from the solar side, one element that has changed or has gained more relevance is on the community engagement side, like making sure that you're not going to have any issues when building the project itself.
Yeah.
And it's something that maybe it was not such a relevant part of the conversation before. Has something similar happened on the CCUS space?
Community engagement is super critical for any infrastructure project. And I think most of our clients are very focused on it, right? Well before they call us, they've been talking to the community.
Yes.
And it has to be a focus. And I would say the CCUS industry has been very focused on it. I don't want to say that solar and wind have been less focused on it, but just the nature of the business where you're in CCUS, you're building pipelines and you may be going, several hundred miles and you're injecting carbon and you're taking carbon. They have a much more heightened focus. We see that aspect of it in all sectors and from all our clients.
And how relevant are other partnerships with other stakeholders in developing a CCUS project? I would assume that there's a lot of communication and engagement among different types of stakeholders. So could you tell me a bit more about that?
Short answer is it's very important. These are hard projects. They have a lot of CapEx, a lot of different, consultants and businesses bring different skill sets that they're very good at. And it takes a lot of partnerships to get them across the line.
Yeah.
That's just the short end of it. And I think that we see that quite a bit in really all infrastructure projects. The more complicated it is, the more partnerships you really need and the more forward thinking you really need to be.
What needs to happen in the space so we can see a more accelerated investment in CCUS projects?
I think the incentive structure is there. We need to focus on the transport of carbon.
Okay.
How do we get it to where we need it to be, whether it's sequestration or whether it's enhanced oil recovery, and then the business models to emerge to incentivize that.
Okay.
And I think that's a critical point, which is business models are still new, right? There's a lot of capital that's been raised, and we have done at least a few transactions in the market. When I say we, the market's done a few transactions.
Yeah.
But how do we scale that to much, much bigger dollars and much, much bigger transactions? It's going to require a larger evolution of business models. And I think your critical point here is transportation of the carbon. Right now, if you think about the benefits of carbon capture and sequestration comes in two formats, like we said, right? You're sequestering it, you're getting a tax credit, or you're using it for enhanced oil recovery, and then you get priced for carbon and you get a tax credit as well.
Yep.
However, there are certain industries like ethanol where a less carbon intense ethanol fuel has a premium.
Okay.
But you also could do enhanced oil recovery. But it's all about, if you think about where ethanol is and where enhanced oil recovery is, it's in two different locations.
Yes.
Right? The carbon has to be captured, and then it has to go either into a well, which is going to require a decent amount of piping, or it needs to go to an oil field. And those are not always going to be in the same spot.
Yeah.
The market needs to decide which is the better route or the more opportune route for the market and where it needs to go. And so that's where the transport, I think, is very critical.
Okay.
How do we transport it? How much does it cost? And you have to price all of that into your economics.
So it's like innovation on the transport side, so you can up to like make more bang for your buck for the single project, right?
That's right.
And make sure that it reaches the point that
it reaches where it needs to go, where the demand is. Like, what's the demand driver for that carbon?
Okay.
The demand driver could be enhanced oil recovery, or it could be less intensive ethanol.
Yes.
That's what the market will tell us. The permitting process for the sequestration sites is still quite long, so that needs to be faster. If I zoom out, I would say the incentives are there, the technology is there, the demand is there. We need to all focus on permitting for pipelines, for wells, so we can get these projects to a stage where they are ready to be financed.
Perfect. Omar, thank you so much for sharing these insights with me. I've learned a lot about CCUS, and enjoy the rest of the conference.
Yeah, thank you for having me. It's an exciting sector, and we're glad we're a part of it.
That conversation with Omar really underscored how policy clarity and business model innovation are essential for scaling CCUS. And one theme that kept coming up, both in our discussion and throughout the conference, is regulation. To explore that, I sat down with Liz McKinley, who joined us earlier on the show in April. She's a partner at Bracewell, and she's deeply involved in the legal and regulatory side of CCUS projects. Liz shared a sharp perspective on how federal incentives, evolving EPA rules, and pipeline permitting hurdles are impacting project timelines and what companies are doing to adapt. Liz, welcome back to the Interchange. I love when we have guests on repeat, but more than that, like when it's a woman in the show. I'm biased, so welcome back.
Thank you. Well, great to be here and great conference here today.
So we last talked in April, and we talked about permitting, regulatory challenges on the CCUS space. Has anything changed? What has changed over the past few months?
Well, great question. I would say that I saw some trepidation in the spring with projects, mostly in anticipation of the reconciliation bill, which became the One Big Beautiful Bill. There was a lot of concern as to how CCUS would be treated in that legislation, and we're happy to say that it was treated well.
Yep.
The 45Q credits for carbon sequestration were maintained and increased. the rate of credit was increased for EOR and utilization to bring that rate in parity with permanent sequestration. So not only did that provide another financial incentive for CCUS, or an increased financial incentive, but it also gave people more comfort towards the administration's acceptance of and support for the CCUS industry. So that was really important. And following that, I've really seen a tremendous amount of confidence in the industry, more capital coming into the industry, and generally a lot of enthusiasm.
Yeah, and also it's something that we're seeing here in the conference, like full room for your session.
Absolutely.
So there seems to be a lot of interest in the CCUS space and a lot of variety on the players involved. So that's awesome. Are you seeing progress or just in general positive momentum on the permitting and regulatory side, not only on the incentive side?
Great question on permitting. Something that I addressed when I just spoke at the conference was less progress in terms of looking for pipeline regulatory guidance with respect to supercritical CO2.
Okay.
PHMSA already had regulations on gaseous CO2, but does not have an immediate plan to issue guidance on transport of supercritical CO2.
Could you elaborate just for the audience, like what's the difference between
Sure.
supercritical and gas?
And gaseous state. So the supercritical state is in a liquid state. It's highly compressed.
Okay.
So you need a heavy gauge of pipe. And that's what a lot of these projects were seeking to use.
Okay.
Was shipping supercritical, highly compressed CO2. That's most of the projects in the northern Midwest. A lot of those, as you know, had issues getting permitted. And when I asked our pipeline safety team, led by my partner, Catherine Little and Annie Cook, why is it if we saw Republicans effectively embrace CCUS in the One Big Beautiful Bill, and we know there's an eye towards permitting reform, why are we not seeing this guidance come out of PHMSA with respect to transport of supercritical CO2? And, their view was kind of two-part. One is, it's not that they think it's unimportant, but there are a lot of other priorities right now.
Okay.
They're trying to focus on those other more immediate priorities. And also, the general environment right now is not to add more regulations, but rather to try to reduce the regulatory burden. So, there's a little bit of a challenge. If you are going to add more regulations, are you going to take something else away? How can we make sure that this isn't an administrative burden? And I asked them, really what impact do they think it would have on the market of this guidance now being pushed out? It could be 2027, it could be later. And they said that's given a little bit of fuel to the opposition who say these pipelines are dangerous, because they can point to the fact that, they're not regulated, there's uncertainty about them, and it kind of supports their case in opposition. That said, I will say, as a commercial response to the lack of guidance, I've seen two things happen, right? You saw the success of the Tallgrass Trailblazer pipeline. That is a gaseous CO2 pipeline, and what they did there is they didn't build new pipeline for the most part. They repurposed an existing natural gas pipeline. They took it out of natural gas service, and they used it to ship CO2.
Okay.
So they were able to avoid a lot of these permitting requirements for these shipments of supercritical CO2. They're already shipping CO2, so this has been a huge advantage for them. Other people are looking at repurposing other pipelines currently in use for natural gas. You have to go through the FERC process to do that. Otherwise, I've seen projects really thrive where they're in close proximity to a sequestration or EOR or utilization site. I don't see many people now pursuing projects that are going to require long-distance pipelines. Really what I've seen is more capture localized with sequestration or EOR.
So it seems that the main viable options now are either you're repurposing an existing pipeline or you're close to the sequestration sites.
Or you're relying on pipelines that for years have been shipping CO2 for EOR. That was typically taking CO2 from subsurface springs and shipping it for EOR. A lot of those companies, like Oxy, who have been doing that, are just now getting industrial customers putting their CO2 on that line.
Okay, perfect. So Are there any other challenges thinking about, I don't know, cost, technology that are affecting CCUS project economics?
Right now, something that has caused concern is the potential repeal of the greenhouse gas reporting program.
Okay.
That's something that's administered by the EPA. It was built under guidance under the Clean Air Act. Now the EPA has taken another look at it and thinks that the greenhouse gas reporting program goes beyond their mandate in the Clean Air Act, and they're pulling it back, thinking it is, an unnecessary regulatory burden. The downside is the greenhouse gas reporting program is woven into a number of the federal tax credits for energy transition, including the 45Q credits for carbon sequestration. The requirement for permanent sequestration is that you have the appropriate underground injection control permit and abide by the applicable rules under Subpart RR, which is under the greenhouse gas reporting program. So when these announcements or the anticipation of this repeal first came about, there was a lot of concern among my clients as to whether this was kind of a backdoor way of getting away from the CCUS federal tax credits.
Yeah.
We did not think that was the case. In fact, we knew the EPA had a completely separate purpose for pulling back these reporting rules. But there's still, a fair amount of concern, if not those rules, what? So there was an appeal to the EPA of can you keep those rules standing for purposes of federal tax credit qualification? In their announcement a couple of weeks ago, the EPA declined to do that. They didn't think it was within their mandate under the Clean Air Act, and they didn't think it was part of their mandate to be holding up these regulations for purposes of the federal tax credits. Now, the Treasury Department has known about this potential repeal for some time. So we don't think that when the repeal actually occurs, that there will be a gap and people won't be able to claim 45Q credits. We do think in the interim that guidance will be established for how to comply with operating and maintaining sequestration sites. There's just a little uncertainty right now as to what that will be. So that's causing a little bit of consternation, particularly with banks that are looking at financing these projects. It's very tough to tell a bank, look, we don't know what the requirement is going to be.
Yeah.
It's going to be different. We're going to have to figure out who's going to administer it. But we know there's going to be one, and we don't think it's going to be, there's an intent to make it more onerous. They like the certainty. So even in light of this potential repeal of the greenhouse gas reporting rules, I have seen projects moving forward. I don't see people stopping the progress. I think they are reasonably comfortable that, there will be a replacement for the greenhouse gas reporting rules within Section 45Q. Not clarity yet as to what that is going to be. We don't think that there is an intent to be more onerous or disqualify people for the credits who would qualify now, but it's just a wait-and-see approach. I would say while it creates some uncertainty, I don't think it's creating fear in the industry.
Okay. So that's not stopping investment from happening overall.
No, but everybody would like clarity sooner rather than later.
I think everyone would like that. And actually, this is tied to my next question about uncertainty at this point is inevitable, right?
Yes.
So what are your clients doing in the face of that uncertainty? Like on the renewable side, it looks like scenario modeling and just trying to figure out how much money you're going to get from your project depending on the incentive available, how much the equipment costs, tariffs, so on and so forth. How does that look like in the CCUS space? Is it similar? Like a similar approach?
Yes, absolutely. So what I see my clients looking at is, the cost of the CCUS equipment. In some cases, if you're adding it to an operating industrial facility or even an industrial power generation facility, there's a question of how much downtime will that result in. Also, if they have a lot of demand for their power, whether it's the product they produce or the power that they're generating, there is some concern as to whether CCUS equipment, which like all other equipment has to be maintained, there has to be some necessary downtime.
Yeah.
Will that impact the deliverability of their product?
Yeah.
What risks does it add? If they're going to incur this significant cost, what are the benefits they're going to receive? What incentives? Obviously, if it's just a pure play CCUS, it's the 45Q tax credits, maybe some other environmental attributes, voluntary carbon market credits. But when you're decarbonizing another industry, such as clean fuels, you might make that fuel that's being produced eligible for the 45Z federal tax credits. It also may be eligible for other state programs like the California Low Carbon Fuel Standards credits. So you have to look at all the different incentives that are available, weigh it against the cost, and also if you're producing a cleaner, greener product, for example, decarbonized power, you're very likely to get an additional premium for that product.
Yep.
So you really have to take all those factors into account in contrast with the cost CapEx spend for the project, as well as the cost of any fees for transport and storage, which is a long-term arrangement, and any additional maintenance cost for all of that as well.
Yeah. And there's also this component on risk, right? I just had a conversation with Omer from Bank of America, and he mentioned like one key piece to consider on the risk side is risk of leakage, which is something that you don't really have in the renewable side. Well, you have losses, but yeah, that's already considered as part of the normal operation of the asset. But in the particular case of leakage in CCUS, you're going to lose that incentive. There are different elements to consider as part of that risk mitigation process.
Absolutely. And I've spoken to a lot of banks about the recapture risk. And that is if the CO2 that is stored subsurface leaks into the atmosphere. And if that occurs, you can have a loss of tax credits. On a LIFO basis, you treat that CO2 as if it hadn't been stored. So for a lot of banks, this is really a new area, right?
Yeah.
Understanding the geology of the storage. And there isn't a lot of storage data. We're getting more and more every day.
Yeah.
But there isn't a lot of data about storage of CO2, whether it's likely to leak, whether it's likely to migrate. It can migrate and come up through, other abandoned oil and gas well sites. It's very site specific. So that's a whole new area for them, is understanding the geology risk. Fortunately, insurers have stepped in to fill some of that gap. And there are insurance policies that are available to insure against the risk of recapture of credits if there is leakage or any other penalties or violations that might occur that give rise to a leakage of CO2. Years ago, there was a hesitancy to pursue the insurance because the premiums were so high.
Yes.
Obviously, the insurance companies were also getting up to speed on what is the geologic risk, but they are coming down. So I think that is really helping projects move forward, not only in getting financing, but also monetizing the credits.
Okay.
So that is moving around along. I think people are getting a better handle on it, and really more long-term data as to whether that CO2 stays in place, what factors they look for that might, pose a greater risk, and whether that CO2 is calcifying underground, reducing the risk that it would leak in a gaseous state.
Okay, perfect. We touched on the challenges. You already started talking about some elements or changes that are happening in the market that are allowing to have more CCUS deployment. Is there anything else happening that is precisely helping see more CCUS projects on the ground?
Again, I think the One Big Beautiful Bill gave a lot of people comfort for support of the industry. I think there's just more experience. There is more now liquidity in monetizing the 45Q tax credit. Banks, insurers are becoming more familiar with it. I think we see developments in the voluntary carbon market, registries being more familiar with CCUS operations. I just see a greater comfort with the technology. Originally I really saw it adapted in pre-combustion capture, ethanol facilities, gas processing facilities, and that was the vast majority of my work. Now I'm really seeing much more on post-combustion capture, on gas-fired power plants, and these deals are closing, and it really gives me a lot of belief that this is going to go broader scale much more quickly.
This is a perfect way to wrap up. So, Liz, thank you so much for joining me again in the show.
Thank you. Great to be at the Wood Mac conference again.
After diving into the legal and policy side with Liz, I wanted to shift gears a bit towards the technology and implementation front. Because at the end of the day, CCUS only succeeds if the systems work efficiently and at scale. That's where my next guest comes in, Shahul Hamid from Emerson. Shahul breaks down how oil and gas expertise translates naturally into the CO2 space, and how automation, measurement, and data accuracy are key to de-risking early CCUS projects. We talk about innovation, cost reduction, and how Emerson is helping clients make CCUS both operationally reliable and commercially viable. Rahul, welcome to the Interchange Recharged
Yeah.
podcast. So happy to have you here.
Absolutely. Thank
So-
you for having me here.
When I think of Emerson, I think more on the oil and gas automation side, right?
Right.
So how did you end up working on decarbonization and now as part of the conference, obviously CCUS?
Right. So Emerson does involve quite a bit outside oil and gas industry, but oil and gas is our major contributor to our revenue stream. However, I'm more involved in the measurement systems.
Okay.
And you may ask, obviously you asked me that why an oil and gas guy is in CO2 space or CCUS. There are a couple of reasons for that. Number one is, when it comes to CCUS, you have the three components: capture, transport, and storage.
Yep.
So the transport and storage are very much run by oil and gas companies.
Okay. Yeah, makes sense.
So all the technology that is involved and challenges and investments, they are all very related.
Okay.
And the capture part, obviously, that's kind of different. Could be more for chemical industry.
Yes.
But the major part, the other two parts. So that's number one reason. Number two is we didn't want to make CO2 as a separate business or on its own. Our philosophy is like, okay, we are in oil and gas. We want to continue to be there, and we want to help our customers to transition
Okay.
as it goes. So I think it's better to work within the system and go towards the goal rather than saying that, hey, this is a different business. So that's another reason why we kept it as oil and gas.
Yeah.
And you might have seen that many companies talk about or renamed or rebranded as energy.
Yes, we have seen that a lot over
You
the
have
past
seen that.
few months.
And we consciously did not do that for that very reason. So we're proud to be in oil and gas.
Yeah.
We are there. We're going to work with our customers to transition and do sustainable processes,
Yeah.
right? So it's almost like safety. Rather than having a separate department for safety, you just
It's embedded in the
embedded in your
operation.
normal processes. So
Awesome. And it seems like a very natural transition now that I think about, or natural part of the service offerings. As you mentioned, oil and gas is already present on all the transport side, on the storage side. So just the product itself, the molecule changes from the hydrocarbon
Correct.
to just the
Correct.
actual CO2
just different
molecule.
commodity,
Yeah.
same process.
Something that we have been discussing in the show, it's the challenges that are related on the renewable side. So we've
Okay.
talked about policy, we've talked about supply chain challenges, inflation. How does that look for the CO2 or CCUS space right now?
I think in general, at some point you would see the last couple of years, I'm talking from global perspective, then
Yeah.
we'll come to US specifically, but there was a great push towards renewables, which CO2 part of that equation. The world realizes that we are not there yet. However, it doesn't mean that we should forget about it. I think it's a process. As we transition, we are going from, say, coal, and then we got the era of oil, natural gas,
Yep.
and then renewables. As you can see, the carbon intensity is reducing as
Yes.
we move. I personally believe we are in that natural gas era right now,
Yes.
right?
Fully agree.
I think that's one area I think the left and the right agree on.
Yeah, totally.
So they say it is a bridge fuel. I mean, literally, it's a political bridge too.
Yeah.
If you think
Oh,
about
yeah.
it. So now let's talk about your original question about renewables. I think we need to position in them today. We know it's coming. It's just a matter of time.
Yeah.
So the investing today in the technologies and everything is extremely important. However, within the renewable, I think CO2 or CCUS has the best chance
Okay.
of succeeding, especially in the US. You saw they continue to have the 45Q tax credit. So that's a big incentive. The government is basically paying you to capture and store.
And the fact of having the government
Yeah.
on your side really helps,
Yeah.
as we have seen over
Yeah.
the past few years
Yeah.
with the other incentives.
Exactly. I think that's a winner right there. But on top of that, there is an addition benefits too with CCUS project, apart from the tax credits. Like I said, the oil and gas companies typically are involved in the transport and the storage. Naturally, they do that. But also oil and gas companies are seen as the carbon producers.
Yeah.
Because it's a hydrocarbon company, right? Believe it or not, oil companies can actually get into net zero. People say, how can oil company get into a net zero situation? Because they're producing carbon to
Yeah,
start
yeah.
with. Oxy is a good example. They have a lot of technology when it comes to transport and storage, and they make use of that knowledge. So I think CO2 is a big winner in the US within the renewables, in other words, solar, wind. I think eventually it will get there depending on how things evolve. But gas is still relatively very cheap.
Yes.
Right. The economy is going to decide that eventually, what makes sense, right?
Yeah.
We are in a good place with CO2. So.
It seems that on the policy side, as you mentioned, CO2 has been one of the biggest winners, at least in the US, right? But what about other factors that are affecting deployment, financing, such as inflation, supply chain issues? Is that also a challenge within the CCUS space? And what is Emerson doing about it?
Right. So it's a challenge. Inflation is not the challenge we have today, and supply chain. It's not specific to CO2. In general, we have that issue everywhere, including oil and gas industry.
Yep.
In fact, we see more of the issue in the natural gas. Like I said, that natural gas is booming, and we see more of a challenge there. So it's nothing unique to CO2, but I think what is unique to CO2 is first of a kind. That's I think it's where, because a lot of things we do, like DAC projects, even transport, and there's so much uncertainty around how do we measure this, what are the regulation involved, and it's also changing and people are experimenting. So I think that's where the cost is really going up, because there is no
there's no economies of scale, because you're still working on the first one.
You're still trying out, working out, figuring it out.
Yeah.
So I think that's more of a challenge. But what Emerson is doing is we just give higher discount. No, I'm kidding. So
like everyone in the audience take note.
We are being a good citizen and we're going to give you higher discount. No. So obviously we have our shareholders. We have expectations, right, to deliver to our board and whatnot. So I guess the way we look at this is, how can we make that process for the customer more efficient?
Okay.
The workflow.
Yep.
Right? The workflow, what kind of instrumentation and automation system we can put in place so they can reduce the operating expenditure, OpEx, by having less people. Things are more automated. So it's a win-win. So we have technologies that we can provide, and then they can automate the process along the way. The advantage of being the first of its kind, first of a kind, because you are starting something, you might as well start.
Yeah.
Right. And you start with the latest and
you get the most
greatest
insight,
technology.
Right? Yeah.
Right. So you set the stage with that. So I think that's a huge advantage compared to, say, oil and gas. It's a very traditional market. And we have been working, there's some legacy processes we get stuck in. We find it difficult to change, or the cost of change is too high. But in CO2, because it's new relatively, and we can put new systems and processes in place. So that's where we, as Emerson, come into the place to help.
So it seems that it becomes, to a certain extent, easier to innovate, because there is no other process to change.
There is no precedence. So that makes it a lot easier. And also they're shaping the regulation as we speak. Okay. The disadvantage is uncertainty, but at the same time, being uncertain is also let you innovate, like you said.
Yeah.
Right? So we can figure out what's the best way of doing things. And as a service and product providers, automation in this case, or measurement, we get involved in that formulation together with our customer, what would work the best for you. Yeah. So
as part of that innovation, can you tell me with a bit more detail about, I don't know, are there any specific services or products or solutions that are so far have proven to be more cost effective to your clients?
Yeah. I'll give you one specific example in my realm of measurement.
Yeah.
CO2, or what we call EOR, enhanced oil recovery, that has been going on for a while.
Yes.
Right? Traditionally, this has been measured using certain traditional measurement technologies like senior orifice fitting measurement, which is a volumetric measurement.
Okay.
Right? So today, if you look at it, the credits are measured with mass. Right? Mass is like weight, but without the gravity. I don't want to get too technical, but it's you can imagine it's like weight instead of volume.
Yep.
So the good thing about mass is it's not affected by pressure or temperature.
Okay.
As opposed to the volumetric meter would be affected. So,
which is particularly relevant for gases, because you're interested in the mass, not on the space that it takes.
Exactly. So what happens is, because we are trading CO2 or the tax credit is all measured in metric ton, which is a mass unit. So you want to measure directly what is being transacted, as opposed to the older way of doing things is a volume. You need to convert the volume to mass by the effect of pressure and temperature, which affects the density.
Yeah.
I don't want to get too technical,
PV
but
equal nRT.
Yes, ideal gas law. Here you go. So whenever you have to calculate that number, you introduce more uncertainty.
Yes.
There's a lot more manual processes. There's a latency of data. The volumetric measurement can go as high as like 2% error, right? If not higher, depending on a lot of other factors. So that's where we come in. We say, hey, we have a solution. Measurement is so important in this industry.
Yes.
So that's what it's like
It's
money.
all about, yeah.
It's like a currency, right? So we want to measure that very accurately with the lowest uncertainty. The mass-based measurement with our Coriolis meter, for example, has proven again and again that it reduces the uncertainty. We have Aspen Tech right now as part of Emerson. They are huge on CO2 projects, de-risking, and also overall automation that goes with it through their software solutions.
So it seems that data is at the forefront of how, like, providing more transparency and more accuracy to your clients, right?
Correct. And verification, because we want the data to be defensible in front of the third-party auditing, right? The money is going to be claimed from IRS and whatnot. So it needs to stand the test of third-party auditing. So today we can get a lot of data.
Yeah.
A lot of data. But I think at the same time, having too much data can be overwhelming.
Yes. So you need to learn how to process it properly.
Yes. And that's where we come in and say, what meaningful information we can get out of this data, how to formulate this data in a presentable, in an actionable way so people can take action and do something with it. Just give the data on exception basis. Like just send the data when you need it, not just keep sending all
like
the
what
data.
What do you do with all of that? It becomes unmanageable at some point.
And if you have 100 data and you don't have to action on 90 of them, why send all 100?
Yeah.
Why don't we just send 10 that needs action? So it's what we call communicate by exception. So those kind of things are very important when it comes to the data management. So I think a lot of people getting lots of data right now.
Yes.
But filtering that into a meaningful set, I think that's where the creativity and that's where the technology now comes in. And obviously AI now coming into the picture, helping us to do that. See my point? So you're automating that automation.
Double automation.
Yeah. So
what are you seeing in terms of client types? The main clients for Emerson are oil and gas majors, I would think. But who is adopting all of these new technology? Because as you mentioned earlier, there is a challenge associated with being first of a kind. So the risk appetite from different companies is going to vary a lot.
Where it's going to be successful, like I said, on the piece of capture is different, and then you got the piece of transport and storage is predominantly by oil and gas companies. That is their expertise, so it's very easy for them to adapt to this new way of doing things.
Because there is not a lot of risk associated, right? Like they already know the technology, so it's just changing
the commodity.
Yeah.
Pipeline is a pipeline, but of course there's a different code when it comes to the CO2 transport, but it's still the same concept, right? And also, even if you look at the charts they put out there in the opening ceremony, you see the natural gas processing industry is already up there, being the main people who is benefiting from this or actively involved in this, CCUS, right? And the reason is naturally they're going to strip out CO2 from their natural gas.
Yes.
And you get a very high purity, relatively high purity CO2 to deal with.
Yep.
In order to transport and process that. So I think as a natural gas company, also you're naturally seen as a high carbon producer now. It just makes sense. I have a byproduct or waste CO2 is coming out, might as well capture and store it, and you get a good CO2 balance. And And that's the reason I think the natural gas processing is going to be good. Doesn't mean that direct air capture is not going to be there. It's also evolving, but direct air capture obviously is more expensive.
Yes.
The reason is you are capturing air and the CO2 is like what?
Super diluted, right?
0.03%. So
Yes.
you got to do lots of separation, compression and whatnot, or compression first, then separation and whatnot. But when it comes to natural gas processing, it's right there and you're getting it like over 90% off the bat. And you just have to process a little bit more to send it over. So that's where the economics seems to be working in our favor.
Okay.
And if you look at the transport part, where our natural gas processing facilities are very close to the oil field.
Yep.
Where
Exactly.
you can push it towards wherever you want to store, to the EOR or just a storage wells and whatnot. So that kind of I foresee taking in shape a lot faster than the other industry sides. My counterpart can talk about it. On the capture side, there's a lot of chemical processes that is involved in stripping the CO2, compressing, and by itself, we have lots of solutions that will help on that part, on the plant processing and efficiency of the chemical processes and so on. So,
And to wrap up, where do you think there could be more synergies? Like, where should we be expecting more collaboration between, I don't know, financiers, technology firms, majors, or another off-takers? What's the outlook, or what do you think is going to happen in the CCUS space over the next few years?
I think the EPC area is pretty significant in CCUS. So we work with EPC companies together because you got customers like oil and gas. They are very well versed with the transport and the storage. When it comes to capture, they would normally hire an EPC. Even the transport, they will hire an EPC. Then we work with EPCs in order to form a collaboration, say that, hey, what's the best way of doing this?
Yep.
I mean, we don't have, just one piece that say, oh, this is the best way to do it. But we got to look at the big picture and see what's going on. And that's where we bring our automation partner within Emerson to link up all the field instruments, which I personally deal with, my department. And then how the instrument can be more intelligent in terms of filtering the data and make the meaningful interpretation. And that discussion goes with the EPC, even to a certain extent the OEMs as well, to make sure that we are doing the right thing. And then at the same time, we are also talking to the end user customer, like Oxy or Exxon and whatnot, making sure we understand what the outcome is. And then we work with the EPCs and OEMs, make sure that that's going to satisfy the end user's requirements. So that's kind of our workflow, how we go about it. So
awesome. So it seems that there is going to be a lot more movement in the space, more conversations happening among different stakeholders. So
absolutely.
We'll stay tuned on what you and your team continue developing at Emerson.
Thank you.
Awesome. Well, this has been really insightful. Thank you so much, Rahul.
Thank you. Absolutely.
So, what did we learn from day one here in Houston? First is that finance follows certainty. Incentives and proven technology are the bridge to scale. We also discussed that policy clarity and permitting reform remain the biggest bottlenecks, but momentum remains strong. And finally, data, automation, and collaboration will define the next phase of carbon management. The industry is moving fast. And while there's still some uncertainty, the mood here is unmistakably optimistic. Join us tomorrow for day 2 of the Wood Mackenzie CCUS conference, where we'll be diving deeper into project development, technology partnerships, and the path to large-scale development. Until then, I'm Sylvia Leyva Martinez, and this is the Interchange Recharged podcast. We're re-recording live from Houston, so see you tomorrow.